And what I look for with a growth company, the first thing is growth. The growth is disappointing. The margin is disappointing. And the future margin in 4 or 5 years out is still disappointing. And I would expect that to be much bigger than that of an old bank, because they don't have to employ all these people. They can put their staff where it's cheaper. They can have their back.
Okay, guys, so here's my conclusion on Felix before the video is even over. Felix is not a growth investor. That's not what he cares about. What he cares about is how much money are you making today? That's all I care about, says Felix. I want to see what your EBITDA margins are today. JP Morgan, are they higher than SoFi's? Great. You're a better investment than SoFi. But what he doesn't actually realize or understand is that investing is for the future, right? If you're looking for money, if you want income, go get a job, right? Go get a job. You'll make lots of money that way. Much more money than trying to day trade, right? If you want income today, go get a job. Go to school, get a better degree, and get a better job. You'll make lots of money that way instead of trying to spend all your time swing trading stocks or getting passive income from dividends. If that's what your goals are, go do that. But Felix is not a growth investor, from what I'm seeing in this video. He is so concerned with margins today. Investing is in the word invest. To vest into your future wealth. That's what the word vest means, to come into ownership, to acquire wealth, right? You vest into your future wealth. It's about the future, not today. So yes, JP Morgan might have better margins than SoFi today. You're completely right, Felix. You're completely right. I give you that. But that doesn't matter to growth investors. What matters is what SoFi can do in the future, because that's what we care about as growth investors. The word growth means over time, to become better over time, to increase, over time, right? That's what growth means. Not to be the best today. So Felix is not a growth investor. And if you're watching him as a growth investor, trying to take tips from him on that, hey, to each his own. And I don't know Felix that well, so maybe I'm wrong. Maybe I'm just misjudging this guy on this one video. I'm sorry for that. If I'm wrong, Felix, I hope I'm wrong about that. But from what I'm seeing, I think that's a fair assessment, right? You're focused on the now. Investors, real investors, focus on the future, future revenues, future margins, right? Future EBITDA margins, not today's EBITDA margins, right? Growth rates. And we've seen JP Morgan's growth rates. We've seen PayPal's growth rates, right? We see that they're much lower than the IPOE so far. We've seen it. It's all right here. 13%, 9%, 8%. That's not what SoFi is doing. Let's look at the investor presentation real quick. Let's just see what SoFi says they're doing here. So if we just look at their charts, we can see it. So they're growing their adjusted EBITDA, their revenues right here. Let's look at their adjusted net revenues. They had 87% year-over-year growth in 2019. In 2020, they did 38%. In 2021, they expected to do 58%. And he says 16%. He said it was 16% multiple times. I gave him the benefit of the doubt, and he kept saying it. 16%. 16% is not 58%. 58% is what? 3 times greater than 58%? He had it completely wrong. Remember, 58% for 2021 is what they're going to do. And they're on track to do that. PayPal did 18%. In 2018, 15% in 2019, and 20.7% in 2020. JP Morgan and Chase did 13% in 2018, 9% in 2019, and 8.9%, let's just say 9% in 2020. Let me just ask you, is 58% greater or less than 9? If you guessed 58, you graduated first grade. Congratulations. In 2022, they expect to do 53%, 40% next year, 33%, 31%. So they expect to start tapering off. So they're going to continue to grow or invest aggressively in their growth between now and 2023. They expect to have up to 40% in revenue growth between now and 2023. And then guess what? They're going to say, hey, we have enough growth now. We're making, what is this? What year is this? $788 million in adjusted EBITDA profits, right? You want profits? Here's your profits, right? 2024, 788. 2025, they expect to do 45% margins. That's more than what JP Morgan Chase is doing right now. They're doing 44%, right? You say you want EBITDA margins? Well, 2025, that's your year, Felix. Wait for 2025. 2025, SoFi will give you 45% margins. So if that's what you want, then come back in 2025 when we can talk. But today, if you're a smart investor and you see this graph and you see this, you see what they did here, you see this, they were in the negative, $227 million in net losses, right? Profit losses, right? They were losing that much in 2018. And now in 2020, they were losing $66 million. That's a huge improvement. So I trust them to make this $27 million in positive profits this year, adjusted EBITDA profits. And then I trust them to make $1 billion in 2025. And so if I'm a smart investor and I trust them based on what they've done in the past, and I trust them to do what they said they're going to do in the future, then I will be very happy to buy them today and invest into my future wealth once they reach this $1.1 billion in adjusted EBITDA profits. And then what happens next? They go to 4 billion, and then they go to 5 billion, and 10 billion, and so forth. And I keep holding, and I keep building my net worth, right? By buying and holding. So if I'm a smart investor, if I want growth, if I'm investing for growth, I am extremely happy to have the privilege, to have the opportunity to invest today. I get to invest here, and then I get a benefit from this, all of this, right? That's what you want, the hockey stick. As an investor, you want the hockey stick. If I get that, why wouldn't I take that over someone who is saying that they're growing by 20% and 10%? Why would I not take that? The reason I want to take that is because I'm not focused on growth. I'm focused on selling courses and justifying that based on JP Morgan's EBITDA margins today, because I don't care for growth. And my name is Felix.